Hello everybody, and once again welcome to Synonomics, the Money Machine. Today as a weekend edition, I'm going to cover a very interesting topic of economics. There has been a lot of buzz around it in the finance and economics circles. And the topic is de-dollarization and the need for another international currency to replace US dollar as a reserve currency. Yes, you heard that right. We are going to talk about de-dollarization. So we'll talk about why there is a need for that, what are the benefits and the privileges US dollar enjoys as the reserve currency of the world, why it's important to replace it now, and who are the top contenders, what are the risks in those currencies, and what are the hurdles, especially for these currencies. So guys, as we all know, US dollar has been the reserve currency of the world. And what does reserve currency mean? Reserve currency means that every country has to have that in their central bank, because all the trades that takes place between the two countries, the payment has to be done in US dollar. So every country has to store it. At the same time, it's kind of freely traded, and most liquid US Treasury bill, T-bill, is the most liquid and most traded bond in the world. So every country is having it. So now, because of that, US actually enjoys exorbitant privilege. And what are those? Number one, US funds its fiscal and trade deficit at almost no cost by that, because every country or most of the countries in the world have to have US dollar in their reserve, number one, and also because of that they are actually buying treasury bills, and this actually helps USA to fund their trade and fiscal deficit at minimum or no cost. Number two, and the most important one, is that US actually uses that. Rightly or wrongly, US uses this dollar dominance for diplomacy and uses sanctions on the countries. The recent example is Russia. After Russia-Ukraine war, US has actually imposed sanctions on Russia. And that has created a lot of challenge for Russia. Number one, they cannot trade in US dollar. Number two, their SWIFT account, which actually facilitates the transfer of currencies, has been frozen. And that's where the need comes. But there has to be another international currency to replace US dollar and to end the dominance and the bossism of USA regarding the dollar and just putting sanctions across the board everywhere. US is behaving that way because of the dollar dominance, guys. Now, let's a little bit look at what is internationalization of currency. So as the name implies, and I would request you to kind of think this whole term in US dollar terms, I would call it. So internationalization of a currency is basically where the currency can become international, it can be traded freely internationally, it can be converted just like US dollar does today. You can convert US dollar anywhere in the world. Then the trade between the two countries can be done in that particular currency, the international currency. At the same time, because of the trade requirements, the countries will have to store it. And the most important of all, that it has to be part of the SDR, special drawing rights of the basket of International Monetary Fund, IMF. I repeat that. In order to be international, a currency needs to be part of special drawing rights, SDR, of the basket of International Monetary Fund, IMF. Right now, the currencies there with their weightage are like US dollar has 43% weightage. Euro has 29% weightage. China actually has gone up quite a bit in the recent past. Right now, Chinese yuan has 12.3% weightage. Japan has around 8% weightage, and GB pound is at around 7% weightage. And that's the composition of this basket, SDR basket of IMF. So to become truly international currency, you should be part of that. So this is what the internationalization is all about. Now let's a little bit look at how US dollar ended up being the world's largest or the reserve currency. What's the history behind that? So let's go for a flashback, guys. So basically, after World War II in 1944, Bretton Woods Committee was formed. There was a Bretton Woods Conference, and there it was agreed that US dollar will be the world's reserve currency. 44 countries signed up for that, and it was agreed that they will be trading in US dollar. And at the same time, they also actually agreed to create IMF and World Bank to monitor all these activities. It was also agreed that US dollar will be pegged to the gold to give it the right prominence and stability. And it can be, US dollar can be converted anywhere in the world at a price or at a value of 35 US dollar for 1 ounce of gold. Having said that, many economists actually say that US dollar has actually replaced GB pound, which used to be the reserve currency earlier. So after World War I, there was a big impact, economic impact in Great Britain, and that kind of weakened the GB pound. USA was a little bit not very involved in the First World War, and the currency got stronger. So over a period of time, by 1930-35, US dollar pretty much was quite strong. And that was quite advantageous for USA. And that paid off in 1944. And then every country started using this exchange system with US dollar. And US dollar ended up being the reserve currency of the world. Guess what? In 1960, US realized that they don't have enough gold to support all the US dollar that's been floating around the whole world outside of USA. And if this gold standard was supposed to continue with 35 US dollar exchangeable to 1 ounce of gold, US will be completely out of gold reserve. So in 1971, President Nixon suspended this gold standard and kind of decoupled US dollar from the gold. And that was pretty much the end of Bretton Woods Agreement. And since 1973, the floating exchange rate is in place, which is still surviving, what you are seeing right now. That's why you're seeing that currencies are kind of floating. Every day it goes up and down depending on the demand and supply. And that's the history behind that. Well, let's look at a little bit of, now we understand what's the need for that, why there is a need to replace US dollar with another currency to kind of end its exorbitant privilege, which USA uses for diplomacy, allows sanctions there, and at the same time, the world has changed, guys. Now we are talking about digital currency. Every central bank, they do have like CBDC, central bank digital currency. Then why there is a need to hoard it? Why there is a need to stock US dollar? There's plenty of transactional cost involved there. And at the same time, in order to purchase US dollar, every country has to buy US dollar. That's giving US dollar undue advantage in the price. And that's the reason, even the US is going in recession, guys, US dollar has not declined. If you look at the dollar index, it's still hovering at around 102, 101, like that. In fact, US dollar has become stronger. Nobody is talking about the recession, the impending recession in USA. Every time Federal Reserve increases the interest rate, US dollar becomes expensive. So this is a unique situation. Just because US dollar is a reserve currency, even though the economy of USA is kind of a little bit shaky, the currency is going up because of their monopoly or the dominance as the reserve currency. And that's where India actually came out with a very smart move and negotiated with Russia that India will purchase Russian oil and pay it in Indian rupees. China followed that as well, and China continued its trade with Russia, and China is paying in Chinese yuan. So definitely, if you look at from that perspective, the trade of Russia is not impacted despite getting the sanctions and despite not being able to trade in US dollar. And this has opened up the whole discussion that can we continue with that and end the supremacy of US dollar. Now let's look at who are the contenders. If you look at the top economies of the world, of course, there are only two of them coming in the mind. Number one is China, Chinese yuan. Can that be an international currency? Think about it. And the second one is Indian rupees. Now let's talk about China a little bit. Guys, China has big share of the international trade. So if you look at the international trade perspective, China has 15.1% share of exports or international trade, followed by US, which is around 7.9%, roughly 8%. And then Germany at 7.3%, the Netherlands at 4%, and India is at 2%. Yes, you heard that right. India's share in the international trade is only 2%, guys. And I'm talking about mercantile trade here. If you look at the services trade, it's slightly higher, 4%, because India sells a lot of services, especially in the IT space. And that has moved it a little bit higher to 4%. But overall, when we look at the trade, it's around 2% as compared to 15% in China. And as I mentioned there as well, Chinese yuan is part of the SDR basket of IMF. So China can be the next international currency. But guess what? China lacks a very big factor, and that's what's stopping it to be one of the international currencies to replace US dollar, and that is called trust. There is no trust for Chinese yuan. Nobody trusts China. You never know what will happen in China tomorrow. So because of the trust, China and Chinese yuan is totally out of the picture. No country is going to hold Chinese yuan and trade in Chinese yuan because there is no trust factor there. And that brings India into the forefront. Can Indian rupees be the next international currency, next reserve currency? And the answer could be yes, because India just showed it, dealing with Russia, that Indian rupees can be done. And almost 14 to 15 countries have signed up for that, including Singapore, UAE, Malaysia, Sri Lanka, Nepal, Russia, as I told you as well. Some of the Saudi countries are also in the queue. They have actually expressed their interest for that. But let's talk a little bit about the risk factor. What are the risks for if Indian rupees becomes international? And does Reserve Bank of India want it? Guys, the answer is no. Number one, if Indian rupees becomes international currency, there will be a huge demand for Indian rupees. And that means Reserve Bank of India, RBI, has to issue more rupees to fulfill that demand. And that will add to the volatility of Indian rupees, which they will not want. Number two, India does not want, if that happens, Indian currency will be appreciated. Just like US dollar example I gave you. Every country will start buying Indian rupees, storing it to use it for the trade. And the value of Indian rupees will appreciate. And India does not want that. Why? Because right now, as I mentioned, India only has 2% share in the global trade. And India has to actually increase that in order to create and continue with this robust economy. If Indian rupees appreciates, it will negatively impact the export. And the global trade will further go down. Guys, India is a trade deficit country. Most of the countries India deal with or trades with is pretty much in the trade deficit. Be it China, be it Russia, be it USA, or you name it. Only certain countries, smaller countries like Sri Lanka, Nepal, Bangladesh, all these countries, with all these countries, India actually enjoys the trade surplus. So appreciation in the Indian rupees is actually not good for Indian exports, and that will further reduce the share of trade from 2% to below 2%. India will not want it at this stage. Now, and that's one of the reasons, let me remind you that actually RBI has been trying to keep the Indian rupees pretty much at between 80 to 82 rupees right now. It's very much stable right now. So the idea is to keep the Indian rupees stable, but not to let it appreciate. So recently, because of the strong economy, as I had covered in the previous videos, India actually posted 7.2% GDP growth, the highest in the world. Right now, India is the fastest growing economy. And that's going to continue for next 3 to 5 years. And because of that, the currency has always been a little bit in the upward pressure appreciating. So if you really look at that, Indian rupees has been kind of stable, or every time it tries to appreciate, RBI tries to pull it down and bring it in that range between 80 to 82 for almost the last 1 year. It has been hovering at around that. Unlike its previous history, where Indian rupees had been declining, depreciating 2 to 3% every year. I'll come to that later. Now, what are the hurdles? So these are the risks, guys. And what are the hurdles? Before we go to the hurdle, let's look at why there is a need for India as well to make Indian rupees international. Number one, that right now India is at number 5 position of the world economy, global economy. For example, Indian economy is the 5th in the world. After USA, GDP of $27 trillion, then is China, $19 trillion, then is Japan, $4.4 trillion, then is Germany, $4.3 trillion, and then is India, $3.8 trillion. And what does this mean? The gap between India and Japan is very small, 4.4 versus 3.8, so $0.6 trillion. And Japan is growing at a very slow pace. Germany is in recession. India is growing at 7% growth rate. So within 5 to 6 years' time, India will become the 3rd largest economy of the world, just after US and China. And if that happens, there is a need for Indian currency to be floated. to be international. Of course, China has trust factor. When China has found some other ways to do that, they have opened a swap rate actually, swap line with other central banks, so that they don't have to do a lot of changes in their capital structure. India, on the other hand, if India becomes the third largest economy in the world, the currency has to be international. That's one thing. Second is basically the push factor. The example I gave you was the Russia example. So all these countries actually now want to do business and trade in Indian rupees because they are sick and tired of this US dominance and their sanctions. Russia is a classic example right now. Third and the most important point is right now there is no need to have physical currency between two countries. They can deal with, as I described earlier, CBDC, central bank digital currency. And in fact, India has been pushing it big time. Their UPI, Unified Payment Interface. Now that's pretty much been agreed with Singapore as well as with UAE, Malaysia, and a lot of other countries are in the line. They like this idea. You don't need to transfer the currency, the physical currency. In this digital world, you can just transfer digitally. And that's where India is actually trying to push UPI, Unified Payment Interface, to the other trading partners. That way, there will be less transaction cost, less hurdles, and the trade will be seamless. But what are the hurdles right now? The hurdle is number one. In order to become international currency, of course, the macros have to be very strong, guys, which is out there right now. In the last 7 to 8 years time, India has been growing pretty fast. It's a very, very robust economy right now. And as I covered earlier, it's the fastest growing economy, 7.2% growth rate, where the world is supposed to grow at 1 to 2%. And this, according to IMF, this is going to continue for next 3 to 5 years time. So the strong macros are there, but definitely they have to show a little bit more resilience. We need to spend some more time, 1 to 3 years time, to see that yes, this economic growth continues, is sustainable. Number two, that the another hurdle is basically that the continuously declining or depreciating asset. As I mentioned earlier, for the last 1 year, Indian rupees have been kind of stable. At times it kinds of appreciate, which RBI puts a cap on that. But in the history, if you look at the last 10, 20 years history, Indian rupees has been a depreciating asset. Every year 2 to 3% decline in their value. So the countries may not be very comfortable storing the currency or the asset which is kind of declining. Third, and another important aspect is, as I talked about it, UPI, all this digital currency that India wants to do, wants to roll out throughout the world, has to get the prominence. The country should be able to accept that. Right now, they are talking about 15, 16 countries, but it has to be more than that. And that will take some time. Another most important thing is basically, which I will like to highlight here, and which Reserve Bank of India has also provided as kind of a guideline recently, is that India needs to have a mechanism in place where, just like US Treasury bill, Treasury bond, Indian bonds should be stabilized in the market, be liquid in the market, be in demand in the market. So masala bond India has issued needs to be stabilized, which is stable, but no, it's kind of, people should be, or the country should be able to buy that and hold it. Right now, there is 5% withholding tax on masala bonds. So if you buy masala bond, there is a risk, little bit of risk of the depreciation of the currency. At the same time, Indian government will charge you 5% withholding tax. So that needs to be abolished. In order to make Indian rupees as international currency, there has to be a lot of capital structure changes RBI needs to do, especially in the current account structuring. So let me put it into two scenarios. So the countries India is dealing with in the trade, either India is in the trade deficit or in the trade surplus. India should have the right mechanism to deal with both of them. For an example, let's talk about Russia. So India has been purchasing Russian oil and other stuffs based on Indian rupees. So India is paying in Indian rupees to Russia for the oil and other imports. But Russia is not buying enough from India. So India is actually running a trade deficit with Russia. So what will Russia do with all that Indian rupees, by the way? That is a challenge. And that's why recently Russia has said that they are feeling uncomfortable and they have asked India to pay in Chinese yuan. Yes, you heard that right. In Chinese yuan, because the volume of the trade with China is much more to Russia as compared to India. So the countries where India is running a trade deficit will have these kind of challenges. So India will have to provide some kind of a hedging mechanism for its depreciation, number one. Number two, India should also provide an opportunity for investment for all these currencies that the countries will be storing, so that they find the right use of it. And that means the masala bond that I mentioned earlier needs to be very robust. The 5% withholding tax needs to be abolished. And at the same time, the financial markets, capital and financial markets of the country needs to be vibrant, which is the case in India right now. That's not an issue. But there has to be a lot of changes needs to be done in the capital side so that the foreigners can actually invest freely in India. So these are the changes that needs to be done, and this has been actually proposed by a committee of RBI. They have not accepted it. In fact, RBI wants to get all these changes and to make Indian rupees a little bit more international through these channels without making much changes in the capital liberalization. On the other hand, the countries which are with which India is in the trade surplus, and I gave the examples earlier, Sri Lanka, Bangladesh, Nepal, and others, basically, there has to be an agreement between the two central bankers that they will actually be traded, the two currencies will be traded. So, in a nutshell, there is a need for de-dollarization because of the reasons I described. The two contenders are there, Chinese yuan, Indian rupees. China is actually trying to push very hard. But because of the trust factor, it's not getting the prominence. So what China has done right now, China has set up a swap line with multiple countries. They're still dealing with that, but they are swapping. Swap line means the two central bankers can actually swap their currencies as and when required, keeping dollar out. India, on the other hand, has a risk. They don't want the currency to appreciate too much. They don't want to issue too much of rupees because India is going for digitization. In fact, India has been withdrawing the currency. Right now, there is a scheme going on that 2,000 rupee notes are getting withdrawn. The deadline is like 30th of September. Before that, we all know about the demonetization. Actually, that's the right thing to do to bring the economy in a much stronger footing. So India would not like to issue more rupees because that will create more volatility, and it's against what is the direction where India wants to go from the digital money. At the same time, appreciation of Indian rupees will impact or hurt the trade. The export will be impacted, and the 2% right now, 2% share in the international trade will come further down. So, but Indian government and Reserve Bank of India do realize that there is a need for that to do the de-dollarization, because right now, guys, 70% of the 600 billion reserve of India is in US dollar. India has to store plenty of dollar there. And also, if you look at from the trade perspective, 90% of that is pretty much in these two currencies, US dollar and euro. 80% of the trade India does with the rest of the world is in US dollar and 10% in euro. So right now the time is not ripe, but India is heading towards the right direction. In the next 5 to 6 years time, you will see Indian rupees emerging as an international currency. And you never know, it can become reserve currency as well, depending on all the things that I described, as well as being part of the SDR basket of IMF. Well guys, I think with all these background and stories, I think you have got a great understanding of this whole exchange rate system, the whole currency market. As I mentioned earlier, if you like this kind of content and the videos, don't forget to like, share and subscribe. Synonomics basically has been created to give you all these updates, create financial awareness and economic awareness, so that you understand the market, understand the economy, act on it and make money. With that, it's a goodbye from your friend Pankaj Sinha. I'll come back again with a very interesting update for you. Till then, it's bye. Bye-bye.